Welcome to I Got a Guy podcast, a podcast carefully designed to introduce a wide range of very talented and highly skilled professionals ready to share their knowledge and advice with you. Please welcome the host of I Got a Guy podcast, Michael Drelichars. Welcome to I Got a Guy podcast. I'm your host, Michael Drelichars. Thank you so much for being here. To all of our loyal subscribers, we really appreciate your consistent downloads of our shows. And we have a lot of new viewers on YouTube, because we've recently started posting these podcasts on YouTube as well. So for those that like to watch their podcasts, we're happy to be able to serve you as well. So we're confident that every week you get some really great information from our awesome guests, and this week is certainly no different. Many of you know that this show was born out of reading a book called The Go-Giver. And The Go-Giver is really an interesting book for those people that need to or like to network. And I've been networking for decades, and I've been in all sorts of groups and chambers of commerce and trade groups, etc. But this Go-Giver book really changed my direction and my focus in networking. And it's all about giving. It's not about getting referrals. It's about giving, about serving your referral partners. And so this show was born out of a way to actually help my referral partners and my customers grow their businesses. And in turn, it'll grow my business. It's just natural effect of it all. If you are not familiar with the book, The Go-Giver, they list 5 laws of stratospheric success. And in many of my episodes, I talk about these different laws and how the different laws relate to the guest of the week. This week, the law that I want to touch on is the law of influence. Your influence is determined by how abundantly you place other people's interest first. Your influence is determined by how abundantly you place other people's interest first. And I think when you get to know our guest this week, you're going to see how this law ties directly into how he serves his clients, and hopefully serve some of you that may have needs for his service. So I would like to encourage you to check out any past episodes. If you've missed any episodes, you can go to igotaguypodcast.com. That's igotaguypodcast.com. You'll have a list of all of our episodes and a little synopsis of each one of our episodes and ways to contact our guests of those weeks. And then you can certainly subscribe at that point and download these other shows. So that's a great way to reach out to us. And if you want to be a guest on our show, you can also send us a comment through the website, and we can add you to the guest list and tell you how we go about doing that, and give you the opportunity to promote your business on I Got a Guy podcast. So enough of that administrative stuff. Let's get focused on our guest today. As I mentioned, he really helps businesses, and I think you're going to love this conversation. We are speaking with Jerry Stark from Equity Building Financial. Equity Building Financial is the company. Jerry is a really interesting guy. And Jerry, welcome to the show.
Thank you very much. Thanks for having me.
Absolutely. So, Jerry, you and I don't know each other as well as I know a lot of my guests, but I'm really excited to have you on the show because Equity Building Financial provides such a unique niche service in the business community that I think is not well known, and so I was really excited when I got to meet you and speak with you and can learn a little bit about you. I really wanted to have you on the show here today, so thank you for being here.
My pleasure.
So tell us about Equity Building Financial. How do you describe your business?
Well, you ask my parents what I do for a living, and sometimes they can't even tell you. But the main focus that we work around is finance. So we finance business owners. Now, we can do mortgages for individuals, but we really don't focus on that at all. What we ended up getting licensed for that just because we work with so many different business owners and looked at tax returns and personal financial statements. And then we basically said, yeah, we can help you refinance your primary mortgage and save you 3% there. And geez, that's a lot of money. They're like, I don't have time for that. Well, we got all your stuff. We can do it anyway. But our main focus has always been equipment leasing. But from there, since starting the business in 2003, we've kind of started doing other types of business financing, like lines of credit, like mortgages, like uh, bridge loans, like mezzanine financing. So we've really done almost every type of business loan out there, and we find what the customer needs and we work around that. If they can't get approved, we tell them why he's not approved. And here, you have to fix your credit, or you have to build your cash flow or your cash reserves. So we help them get to the point where if we can't help them today, 3 months, 6 months later, we are going to be able to help them.
Okay. So obviously, a lot of businesses, when they need financing, they go to the bank. But some banks are very rigid in their guidelines, but maybe more rigid than even what you might offer, right?
Yes.
So,
And
well, go on. Sorry.
yeah, I was going to say, like, banks are a tremendous resource for us. We can't do checking accounts. We can't do credit card processing. We can't do a lot of the services that the banks do, and the banks are great
Mhm.
at that. We are a B solution, or a substitute solution. If I meet a customer and I find out that they bank at a community bank, I ask them, have you gone to the community bank and asked them for the financing request you're looking for? If they say no, I say, go there first. That's the best place to go look for a loan, is at your primary bank, who knows you. They've had your checking account for years. So they're the most likely to give you the best interest rate for the best terms than anyone out there, other than your mom or
Sure.
dad or family member.
Right. Right. But for those situations where maybe it's a startup business, or it's a business that might be um, branching into a new avenue, and they don't have the revenue to support, maybe some equipment they need to finance or need to purchase. Maybe it's Bobcats,
Mm-hmm.
or it's
Right?
larger computer servers, etc. You help them get that start if they can't get the financing
Correct.
from a bank.
Yes.
So it may
And
be a
we
little bit more
look at
expensive. I'm sorry.
we typically don't charge less than 10 to 14% minimum on our interest rates.
Mhm.
So, sometimes in today's world, I guess that's not that crazy of an interest rate, but that's where we start at. And then sometimes it goes higher. If you did a loan with the SBA, you're getting charged 11% right now. So, right now the interest rates are higher, but even when, the interest rates were at 3%, we still wouldn't charge less than 10 to 14% typically. So now with our A paper type customers, we've gotten aggressive with interest rates. But when you have a startup that is starting a restaurant and you go to the bank, they're going to say, no way, we can't do that. But with me, I start asking other questions. We look at the personal financial statement. It sounds like they were an executive previously. They're retiring. They're opening a restaurant, and their father was in the pizza business. So we love doing pizza ovens as a financing
Really?
asset. So we you could be a startup and it's a pizza oven. You may have to put 20-30% down, but we finance those all the time for startups. So, I mean,
Okay.
not all the time, because restaurants are very, very, very tough business.
Sure.
I think 8 out of 10 of them go out of business in the first 3 to 4 years. So those are industries that banks will not lend to. But we've done quite a bit there.
Yeah. Yeah. What about car dealerships? I'm curious. Used car
Used car
dealerships.
dealerships is another very tough industries. The banks have their list of taboo industries. Auto dealers is one. Jewelers is another one. There's a bunch of others on the list, but for car dealerships, they're buying and selling vehicles. There's floor planning lines of credit that you can get, usually with the auto manufacturers. That's going to be for the inventory of their fleet. So there are other lending opportunities that you can do for more of an unsecured. Maybe you have an all business assets lien on the business, but you can get a little bridge loan for 6 months, 9 months, 12 months. Car dealers in general, they are turning 5, 10, 15, 20, 50 vehicles a month. And again, if they don't buy new cars, their lots half empty, they're not going to be able to grow. So we work with a lot of growing companies in all different industries.
Hmm. Yeah. Yeah. In my business, which is precise fleet tracking, we actually, a subset of what we do is serve that the buy here, pay here car dealers. we have tracking devices for some of those dealerships that when the owner has to carry the paper on the vehicles, and if they don't get if they need to recover the vehicle, they need to know where they are. Um, but you help out those small independent dealerships for
We
that.
do, and we've done trucking companies, smaller. If you are less than 5 trucks, the
Mhm.
banks, the independent lenders don't want to talk to you. Independent owner operators, they don't want to talk to you. So we've done startup independent owner operators. Now, not in the last year because the industry is very, very tough. But this was,
Yes,
6, 7 years ago. An owner operator was working for a customer, and he wanted to buy his own truck, and the owner that he was working for the last 4 years gave me a phone call and told him that this guy is phenomenal. He's going to pay his bills. He's still going to keep working for him as an independent operator now versus an employee. And we did the deal. I think it was a 3-year deal. He ended up paying us off in 20 months. So,
yeah,
we can do some of the things that the banks would never, ever consider, but it's got to make sense. We still look at the 3 C's, and just to share with everyone, it's cash flow, collateral, and credit. So if you're missing one of those, the bank's going to say, nah, we don't want to do it with you. If you're missing 2 of them, we would even consider it. If you're really strong with collateral and you're going to put 50% down, we can finance a 500 credit score guy because he's got so much money down on that deal. So we look at different options and try to say yes to a deal versus a no, and
sure.
then move on.
Yeah. So you've been in business now for 20 plus years,
Yes.
doing this exact business. So the moral of the story is your model works.
We've been doing it for quite a while. I actually got a mechanical engineering degree, then got into technology finance in 1996.
Did you?
So, my wife and I started the company in '03, and it's been, we've gone through some financial tough markets for sure.
Sure.
But
Oh, no doubt.
that's when we integrate and start bringing in some other opportunities or other funding sources. And because of that, I think we are where we are at right today.
I couldn't agree with you more. I think it's those battle scars really help every business kind of refine themselves. It's one thing to get into a business during a boom market where it's like shooting fish in a barrel. Where the rubber meets the road is when you have to actually go from a boom time to a challenging period of time. And if you can survive that challenging period of time, like, okay, now the next boom market you hit, you're going to be rocking and rolling because you've learned a ton, and you've got a lot of experience behind you, and you can appreciate the boom time better because you know what the downside is.
I couldn't agree more. And again, this is we've evolved as a company as well. When we were starting off in the early 2000s, we would syndicate or broker 100% of the deals we did because I didn't have a lot of money to fund deals. As the years went on, I was like, oh my God, this is an existing customer of mine. I really like him. He's paid us back. I'm going to figure out how to fund this myself. So I started raising money from friends and family. And then we started doing more and more deals as the, early 2021, or I'm sorry, early, 2012, 2013, we started doing more and more. Today we fund, we try to fund as much as we can in-house. We still syndicate and partner with independent finance companies. We've got a bunch of different investors that invest in deals with us, but we're doing all different types of loans. We're not doing just
Sure.
equipment leasing. We're doing lines of credit. We're doing bridge lending. We're doing some hard money lending. We can do all types of mortgages. So it's a good mix for our investors as well. They have options. They can do safer deals with a 30% mortgage, behind backing their money, or they can do a riskier unsecured deal and make a lot higher interest rate on their return on investment.
Sure, sure. So, just for our listeners, help us define some of the differences. You mentioned hard money, line of credit, bridge loans. What's the differences between those three vehicles? Brad?
You know what? That's a great question. Like the hard money loan are I would categorize those as just there's no other option than a
Hmm.
hard money loan. And in a hard money loan, you have to have the collateral piece. So, for an example, you've got a property that your grandfather passed down to your father passed down to you. It's free and clear. It's in the city. It's a two flat, but you've come into some challenging times where you can't even pay the taxes anymore. So if you don't pay the $8,000 tax bill, it's going to go to a sheriff's sale. You're going to lose the property. So we've done hard money loans on something like that where we give them $50,000. The property's probably worth $100,000 or more. So we're at a 50% loan to value. So we're fine, right? He has to pay the taxes. He's got to maybe fix the roof, and then maybe he's going to sell the property. He sells it, and then he gets 130 grand. He pays us our 50, but those are very expensive loans, like 2-3% interest only on a monthly basis, which is very expensive.
Sure.
But there's no other options for that type of loan.
Right.
So that's
It's
a
usually a
hard money.
short term. That's usually a short term scenario that when you're really in a bind.
Right. Less than 12 months. So it's a loan for less than 12 months. And if you don't pay us back, you've already signed quick claim loan documentation saying that you're giving the property to the lender. They don't have to go through a foreclosure process because you already agreed that you're giving it to the lender. So
Sure.
those hard money loans, the lenders are smart. They know exactly what, that they've been doing. They've been doing it for a long time. And
Sure.
the customer, they're in a no lose situation because if they give it back to the state of Illinois, they lose it for $8,000. Now it goes to a sheriff sale, they're done. But with the hard money loan comes in, they can do some things with it, and then they hopefully
You have
can
a
sell it
chance to save it.
or refinance it or whatever the case may be. So
Sure.
that could be considered a bridge loan as well. But bridge loans are usually for higher quality credits. I did a bridge loan for a pickle company about
Hmm.
12 months ago, and they were acquiring another company. They were building operations. They were buying more equipment. So we actually did some equipment with them and then gave them a bridge for about $750,000. But that interest rate for that 9-month term for a company that was doing very well, but the balance sheet was maybe a little bit out of whack. There was diverse ownership, so there's no one to sign as a personal guarantee. So we ended up doing a $750,000 bridge loan for 9 months, and they ended up, getting invested in with a private equity group. They paid us off in 3 months later. So
Yeah.
those are, that's the difference between like a hard money and a bridge. And again, those bridge loans are very expensive as well. So
Sure.
you're talking about 1 to 4% every 30 days type of interest rates. So those are expensive, but when you need it, you do it. And then that company has now got $20 million investment from a private equity group. They're acquiring another company. I think they're doing $300 million a year in revenue this year. So
Right. So with the right advice behind you. I mean, if you're a business and you need some financing, I mean, you really got to lean on your accountant, your CPA, your attorneys to make sure you've got your ducks in a row.
right.
This is not a whim. You're not somebody doesn't call you out of the blue and just you know right. I mean, you got to have your ducks in a row. Know what the downside risk is. Know
Mhm.
what the upside opportunity is, and make a really well thought out decision.
And what I also do, Michael, for existing customers, and sometime with new people I'm talking to as well, is I let them know that let Equity Building Financial be your outsourced CFO just for reviewing any type of financial deal you're going to look at. If you're going to do a deal, call us. Let us look at it. Let's talk us through it because we did a deal with you 2 years ago. You paid us off. You're borrowing from the bank now or whatever, but now you come into a position where you have to do something. Call us. I've had customers call us back and they're looking at like one of these merchant cash advance loans and paying 36% for 9 months. I said, this is outrageous. This is way too high of an interest rate. He's like, I need it, Jerry. I have to have it. We have to get it done. I'm like, okay, listen, I'll do it. I'll put one of my investors in. We'll do it for 10% less than what these guys were going to charge you. So you're going to save $6,000 or $8,000 over a 6-month period of time. And he's like,
Sure.
okay, great. So I did it, saved them some money, made really good money for my investor. And again, it was an existing customer. So we knew that they were going to pay us back.
Yeah, and I guess that's a real important thing. You built trust in that customer. The customer has a trust in you, so it's a two-way street.
It is.
And having that 20 plus years experience, you have a credibility behind you as well. That's remarkable.
We have a
Jerry,
pretty good relationship. We have a pretty good reputation. So I think out of 100 or 1,000 people we've worked with, maybe one or two might have something bad to say about us. But I think you'd be hard pressed to find anyone saying some bad stuff about us. Which is,
well, that's great. That is impressive. And the most important thing is as long as you're upfront with your clients and they know what it's going to cost them, and you put all the cards on the table, allow them to make a sound business decision, and if they still think that's the way they want to go or need to go, then at least there's no surprises. Nobody likes surprises.
I wish everyone was like that, Michael, but unfortunately, the people that are out there like, oh, this is a 10% interest rate loan. They tell you that, and then it was 60%. So there's a lot of people that are not as honest as you and I.
Your industry has some baggage there that you have to get around, and you do that one client at a time, I'm sure.
Yes.
So, Jerry, we're going to take a quick break here, and then we'll come back, and I'm going to have you share some success stories with us, because I know you've done some great transactions for clients. You've already touched on a couple of them already, but we want to talk a little bit more so our listeners can get an idea of how you might be able to help them if they're in a position that they need your financing.
Perfect.
But before we do that, share with us the best way to contact you, maybe email address, phone number, what have you.
The best way to contact us is, I'll even give you my email, which is jstark@equitybuildingfinancial.com. So it's JSTARK and then spelled out Equity Building Financial, EQUITYBUILDINGFINANCIAL.com. So sorry for the length, but
that's okay.
That'll be the best way to get a hold of us. And then I've got Chris, I've got Doug, I've got a number of people on my staff that will be, reviewing my emails and making sure we get back to you as quickly as possible.
Okay, great. So I'm going to put that information on the screen for our YouTube viewers and in our show notes, so our podcast listeners can get that information easily and click on that and get right to you, and you can help them with that. So we appreciate that. But stick with us. We're going to be back here in a moment here and continue chatting with Jerry Stark from Equity Building Financial. So stay tuned. We certainly hope you're enjoying this week's episode, and we'll return to this week's guest in just a moment. But now a message from our sponsor, Precise Fleet Tracking Solutions. If you own a fleet of vehicles, even if it's just 2 or 3 vehicles, GPS tracking is an important component for every vehicle. Here are the 5 top reasons companies invest in GPS tracking: driver safety, vehicle location, driver behavior, proof of service, and monitoring vehicle maintenance. Precise Fleet Tracking Solutions can enhance your growth and profit through the use of GPS tracking technology. Reach out to Precise Fleet Tracking Solutions at www.precisefleettracking.com. That's precisefleettracking.com. Or call 847-865-6008. That's 847-865-6008. Precise Fleet Tracking Solutions. GPS tracking made simple. Now, let's get back to the show. Okay, we are back. Thank you for sticking with us. I am Michael Drolachars, host of I Got a Guy podcast, and our guest this week is Jerry Stark from Equity Building Financial, a alternate lending company, financial company that works with a lot of businesses, primarily in the equipment leasing space, but also other types of alternate financing when the need arises. So, Jerry, thank you so much for being with us this week.
Thank you for having me.
So we were talking before the break about the type of lending that you offer and defining some of those terms that the average person may not necessarily know the definitions of. So we really appreciate that. And you did share a couple stories, but help us understand some of the successes that you've had, some of the ways you've been able to, help a company succeed, and maybe they get to the point where they don't need you down the road, but early on they may need your services, and then they may build their credit score or have more cash flow or collateral that maybe the bank would accept their financing requests. You've had some of those scenarios, right?
Definitely. I'll give you my first one, which we've talked about quite a bit. Was a dress manufacturing business that we started working with, probably 2011. So they were a younger company, a couple years in business, but their revenues were growing like crazy. So
Mm-hmm.
they were fabricating, getting materials, getting them fabricated in either China or in India, then bringing them here and selling them retail or selling them to the retail stores. They just couldn't get enough funding to help grow their business. So we ended up working with them, and we started off real small, like a $75,000 loan for a 9-month term. So they paid us back, and then they wanted more, and we were happy to give them more. So we gave them 150,000 short 9 or 12-month loan. Then we gave them 200,000. Then we gave them 300,000, and this is over a couple of years now. But they proved that they were going to continue to pay it back, and their business was growing. We reviewed financials, we looked at bank statements. So we got to the point where they were now doing, I think they were doing $300,000-$400,000 a month at this point. So we ended up getting them a $500,000 line of credit on an asset-based lending line of credit. So we looked at their receivables, we looked at their inventory, and we put it together, and we gave them a $500,000 line of credit. So now we paid off whatever balances they had on the short-term loans. And they went from borrowing money at 30%, let's say, to borrowing money at 16, 17, 18%. So that was a tremendous interest savings to them. But a year later, they needed more money. And a year later, they needed more money. So we tried to increase the line of credit. We did a little hybrid where we gave them a short-term loan as well. And then they got to the point where they were doing about a $500,000 a month. So the company, the owner, and then he had a partner. They ended up, had a decent, personal financial statement. They had decent credit scores. We actually, probably 5 years after we were originally started working with them, refinanced them with an SBA 7A loan. So then everything that they had in debt, we refinanced for a 7-year loan period, and the principal and interest was 8.5%. And paid off over 7 years. So at that point, they were rolling. So
Now, does it depend on whether what they want to use that money for? Is that for like operating expenses or
yeah,
capital improvements? What does it matter?
certain loans, yes. Certain loans don't matter. So
Okay,
if we've got the collateral, we are comfortable as a lender, and then you want to go on a vacation to Europe for a month and a half, go for it. If you don't pay us back, then we've got the collateral as our protection. So we'll take
sure,
that back. But, people don't do that. If they're going to risk their hard worked, collateral that they've earned for the last 10 years or whatever, they're going to pay it. They're going to figure a way to pay us off.
sure, yeah,
Yeah, that was one. And the other one that I think is very important to share with is we had a specialty welding specialty welding company that would actually get materials in from all their customers, do specialty welding to the raw materials, and then ship it back out to their customers. They sometimes had to buy the raw materials for their customer. And then, so again, it was very capital intensive. They were with a community bank, but actually the community bank was just like, we're done. We can't handle these guys anymore. The banker called me, referred me into them. At the bank, they were paying, let's say, 6.5%, 7%. They wanted me to get them refinanced out. I said, listen, we're going to be a lot higher of an interest rate than that. So I met with the customer. We ended up, looking at all the financials. The inventory was growing. His customer base was growing. So his revenue was growing as well. So the bank was not giving him any type of additional line of credit. So they were just stifled on their growth. So we came
Hmm.
in, paid off the bank at $450,000 and gave the customer another $300,000 of true working capital now. Guess what? He started growing again. So now he had to pay 11 to 14% for that interest on that money, but we gave him that additional availability. He started to fulfill the new customer orders that he was getting and then catching up on some of the other old payments. So we've been working with that customer now about 2.5 years. He is only borrowing 400,000 from us now, but his availability is still available. He's doing phenomenal. So they've 2.5 years later, their revenue is growing. They've got a really healthy bottom line profit, and guess what? They're right on the cusp right now of going back to any bank out there because they're strong enough. They came to us for a couple of years. They're going to go back to a bank, and at that point, it's a win-win. So that customer's done with me, but the banker that referred him to me will take him back with open arms, or it'll go to
Sure.
another banking relationship, and he'll have a lot less interest to be dealing with on a go forward basis.
Right. But you are on good terms with him. So in the future, if he needs some additional capital, you would lend to him again in a heartbeat. And
Immediately, and
yeah,
guess how many referrals I've gotten from that gentleman, Michael?
well, I was just going there as well. Hopefully, you get some other referrals because
Yes,
you know it's funny because business owners know other business owners,
they do.
and so when you're hanging around and guys are hanging together, golfing or whatever, these kind of topics come up. And so I can imagine that, when you help somebody out, you help them grow their business exponentially like you did, they're going to want to talk about it because you've changed the trajectory of their business life.
Yes, and it's a good feeling too because you're helping out someone. They're very thankful for it. If I needed any specialty welding, I can get that done anytime.
That's
So
great. And do you just work with businesses here in the Chicagoland area, or you work with businesses across the country?
all across the country. One of my best customers is Houston, Texas based, and they're doing actually, you guys all have used their product. They do the specialty material inside the to-go boxes. So when you order out or whatever, take leftovers home from a restaurant, that little coating that's inside that to-go box is my customer. So he's
Really?
done, I can't tell you, amazing. He's when we started working with him, he had $200,000-300,000 of inventory. He's probably got close to $2 million of inventory right now, and we've
That's
helped
tremendous.
him finance that. So we work with companies across the country and all different types of asset classes, like construction companies. We still work with trucking and logistics. We work with a ton of manufacturers, distributors. So yeah, we work with a lot of different companies out there.
Yeah. So, you touched on the trucking industry. We talked on it before the break as well. That industry, the bottom has fallen out in the value of some of these trucks. Because
Yes.
I deal with a lot of trucking companies as well. And, after COVID, everything just fell apart. So you have to, did you anticipate that, first of all? And,
I wish I
uh,
did. I mean, no. Unfortunately, we did a number of logistic deals earlier this year that we thought we were in a good position from the collateral standpoint, from the or the owners, and we did some deals that we shouldn't have, and the value we thought was, let's say, $20,000 is now way less than 10,000, and that's just 9 months later. So
sure.
it's unfortunate, and it's got to turn around. I think rates are starting to creep up again, but if they don't, half of the logistics companies in Chicago are going to be out of business. So those rates better start going up more.
Well, yeah, and obviously, the ripple effect of that is if these companies go out of business, now we're not getting product shipped across the country as quickly, and so now you end up back in supply chain issues that we
Yes.
had during COVID. So it's kind of an interesting accordion effect. One problem could have impact multiple industries, and hopefully that doesn't happen.
I hope it turns quicker than what it has been this summer, but I think it is. I think it is, and usually on the recession side, that's the first one to get hit and the first one to recover. So I think we're going to be all right.
Yeah, definitely. Well, yeah, and it's an interesting market, and obviously, with the current inflation, the interest rates are higher. Um, at some point, interest rates are going to come down. They may not ever get down to that 2 or 3% we saw,
I don't think
a
so.
couple years back. But do you see that helping your business if the interest rates come down, or does that actually hurt your business?
You know what? You can imagine in today's day and age, there are plenty of business owners that need financing that aren't getting it. So our company is, extremely busy. Emails, phone calls, I mean, nonstop. So again, I would recommend if you attempt to contact us and we don't get back to you within a couple hours or 24 hours, reach out again because our it might go into the spam folder. I've had that happen a number of times too. Those spam folders are working overdrive. But the interest rate, again, whether it's high or low, there's always going to be the underserved banking finance customer. So we're always there. We're always there. We've been around for 20 years and we've helped a lot of companies. And what's nice about us is if we can't help you with a loan today, we kind of tell you why. Your balances are too low. Your credit scores are too low. And here's how you fix it. Or your debt to income is too low, and here's some things you can do. Here's a credit counselor that you could talk to. Here's a budget counselor you can talk to. So we try to help with our customers to get them, where we can help them in 3 months. And again, if we're helping them, if we're saying no to them, there's not a lot of other options.
But the banks already said no to them before they even came to you.
They should have, right. The bank should have said no. And then you look at their credit and they've been, hard inquiries six, 7 times, which hurts your credit score. So when you're applying for credit, tell them you don't want a hard credit pulled on your credit because that hurts you. Everyone knows that. When we pull a credit on you, it's a soft pull. No one knows that we pulled credit on you. So those are the little things that business owners just don't understand. So
Yeah,
we're
yeah,
good at knowing all of the things that go into an underwrite for a small, medium-sized business owner, even a large owner, a large
yeah.
company.
And that's tremendous advice because as I was talking to another guest previously, I deal with a lot of contractors, and a lot of them got into the business, and maybe they're plumbers or they're roofers or they're drywaller guys, and they got into the business and the trades, and they learned it from apprentice on up, and they're good at turning their wrenches and working with their tools, and then they say, well, I'm going to go out and start my business because I'll make more money that way. But they don't have the business background and that acumen and that knowledge. So I can imagine a lot of people get themselves in trouble uh, only because they didn't know. I
Right.
mean, they weren't doing anything wrong. They weren't doing anything deliberate, but they made some mistakes and they got themselves in a bind.
And
You
that's
probably
so
see that a
true.
lot.
And
Yeah,
I've got a bookkeeping company I use for my company, and then I've got my CPA who does my taxes. But the bookkeeping company charges half as much as the CPA firms on doing those monthly, financial updates, your QuickBook
sure.
updates and stuff like that. I've referred my bookkeeper that I use to a number of customers. So now they have her do her the month end closeout where they can get interim financials, then they can get to the bank or the financial institute and get approved for that increase in that line of credit. So, again, some of the resources I use for my company, I refer out. And guess what?
Sure.
The people that I'm working with are grateful. The people I refer them to are grateful. And then they're usually in a much better position 6, 12 months later. So
Right. Yeah.
and you
And
do the same thing, I know.
yeah, 100%. And I do a lot of referring of my customers wherever I can. Obviously, it's the right thing to do. It helps their business grow, helps my business grow, and and that's kind of how why I do this podcast is because I want to help businesses grow. I love to see small businesses succeed. There's so many small businesses in our country. It really is the core foundation, and without those small businesses, we're all in trouble. So it's really important for us all to pull together and help each other out. And that's why when we met, I was so excited to learn more about your business and would love for you to be in contact with some of my clients and I will certainly refer you out wherever I can. And hopefully our listeners, whether they have their own business and they need your help or they know somebody that might maybe be starting a business or want to start a business. If you can provide some advice and some coaching, some counseling, it could be awesome. So that's really tremendous.
Agreed.
So, well, that's great. Any other stories you want to share with us?
I was thinking of this other construction company out in Virginia, West Point of Virginia. But I think I remember was referred to him by like one of those MCA lenders. So he ended up needing one of these MCA loans, and I think I ended up getting involved, and we did one.
What's an MCA loan?
MCA is merchant cash advance. So
Okay.
he was, again, getting once you do one of those loans, by the way, you get calls and calls and calls, and if anyone's taking them, they know your name gets out there, and then everyone starts calling you. So it's horrible. So you have a phone number that you use for work every day, and then once the let's call them New York lenders get your information, it's like blood in the water. The sharks are going to pounce. They call you all the time. Then they call you from another. Then they get robot calls. And then, so I think I was introduced to this guy like one of those types of loans. We did one, and then he did 3 other ones because he needed the money for incredible growth with his company. At that point, he was acquiring another company, and he needed to move quickly. So he basically started giving everyone that he called him to call me. They like, here's my CFO, call him. And I got so many calls just from, the aftermath of that. But we ended up doing a loan with him probably 3-4 years ago, probably like 3 years ago. Then I financed a Bobcat, and then I financed a Can-Am. Then I financed a big excavator. He does a lot of construction. He takes down trees in the mountains on the road. Then he's got the cable, the Verizon and AT&T dropping cable. So his business just grew like incredible. So we did that short-term loan with him. Then we did a couple equipment deals with him. Then I ended up getting him, I think he had a bunch of different properties, and he had renters coming in there. He got that refinanced with like a credit union, and then we're working on it with right now refinancing all of it under a big SBA loan. So I financed a plane for him too. He ended up, he's got a little training airplane company because he travels in West Virginia, Tennessee, all those places. So he ended up, put $300,000 down as a down payment on a Cessna plane, and we financed the other $300,000. So
Nice.
again, great customer, great person, and we're good friends now. So those are other stories we could share as well.
Well, at the end of the day, when you turn off your computer, you got to take a big sigh and be happy with how you serve these businesses. It's got to be really rewarding to you personally and to your wife.
Very fun, thank God.
Yeah. Well, because we're all in our businesses. We put so much time into it, and I was talking recently. I wanted to double my business, but I have to figure out how to work 32 hours in a day, because we put so much time into our businesses, and that in itself, when you at the end of the day, when you do turn the lights off on, you want to be able to be satisfied. And it sounds like you have made the dreams come true for so many small businesses that otherwise would have been out of business.
And we're going to hopefully continue to do that for the next 10 years, if not more.
That's great. That is awesome. I really appreciate all that the sharing that you did today.
My pleasure. Thank you.
Help our listeners again. Share your email address or your phone number with us so they can reach out to you.
I'll give you my 800 phone number as well, which is 888-812-9534. That is our 800 number. Usually Chris will answer that line. And then our
Repeat the
email
number again one more time.
Sure.
Repeat the number.
888-812-9534. And if you want a local number here, I'll give you my local one is 847-380-4953. That's a local business number. And then again, the email, jstark, or it could be Chris, or it could be Doug at equitybuildingfinancial.com.
Great. And I will put that information on the screen and in our notes. And to our listeners, as I've tell you, every week, when you reach out to Jerry, let him know that you heard about him here on I Got a Guy podcast. As professional networkers, we like to know where our opportunities are coming from, and it really helps connect the dots and validate what we do and why we do these types of things. So definitely let him know that I Got a Guy podcast was where you heard about Jerry Stark and Equity Building Financial. So that's great. Well, Jerry, as we wrap up the show here, I wanted to really thank you from the bottom of my heart for joining us today. Great information, and we have not had anybody like you on our show to this point. And you fill a niche that I think is kind of a mystery to so many. And I think what people think about when they think about alternate lending really are those MCA loan guys that they will hound you to the end of time, and you want to stay away from that. And so your industry is got some battle scars, and it's nice to find a shining light in that dark industry. So thank you for doing that.
My pleasure. And one more comment I'll make is I've read The Go Giver you mentioned. I think I've communicated with Bob Berger, who's the author. Great guy, and what a great book. So I highly recommend that as well.
Yeah, it really is. It's really a fundamental book, foundational book that and every business owner should read. So that's great advice. So thank you there, Jerry. And I'm going to just throw a quick little plug in for Precise Fleet Tracking Solutions. This is my day job. I Got a Guy podcast, as you know, is a passionate interest of mine. But day to day, I help businesses that own commercial vehicles using GPS technology. We help them enhance their growth and profit. And we lately we have been doing quite a few trackers into assets like bobcats and mowers and trenchers and things that have been getting stolen. These assets, as you know, Jerry, are really expensive. We just did some bobcats for a client, and he spent over $200,000 on bobcats. And when they're sitting on a job site, sometimes people think that they're free reign and they can help themselves. So we have a really nice tracking solution that is battery backed up. So even if they cut the battery and the power to the asset and tow it away, the tracker's still reporting, and we help them recover this asset, and that really saves them a ton of money. So in any business that has these types of assets, it's really important to reach out to Precise Fleet Tracking Solutions. We can help you protect these assets so they don't get stolen. So if you need to find out more, you can go to our website at precisefleettracking.com. That's precisefleettracking.com, or call us at 847-865-6008, 847-865-6008, and we'll answer your questions and see if it's the right fit for you. But we'd love to help you and protect these assets that are really expensive and valuable, important to your business. So again, Jerry, thank you. To our listeners, thank you so much for downloading this episode. Share it on your social media channels. Tell all your friends about the awesome guests that we have this week, and we will look forward to speak with you again next week. So until then, make it a great week. Take care. Thank you for listening to I Got a Guy podcast. For past podcasts and more information, go to igotaguypodcast.com. That's igotaguypodcast.com. Please share this podcast on your social media feeds and tune in again next week to I Got a Guy podcast.